back to Mortgagenomics Canada. I'm your host, Marco Gello. In this episode of Mortgagenomics, I'm joined by Nicole from HomeEquity Bank to unpack a product that's often misunderstood, reverse mortgages. If you've ever wondered about this product or concept, this one's for you. Nicole is going to walk us through the ins and outs, how reverse mortgages work, who they're for, the built-in protections, and why this option has been gaining some serious traction in the Canadian mortgage market for the past decade. We also talk about the most common myths, explain how reverse mortgages are being used as a smart financial tool, not just for retirement income, but also for helping adult children get into the housing market. Let's get into it. Here's my conversation with Nicole from HomeEquity Bank. Okay, Nicole, good to have you on the podcast. We've been talking about this forever. We're like, yeah, let's schedule this in and get things rolling. And I think it's timely because I happen to have a few applications in with HomeEquity Bank, and
Yes.
you're going to answer a lot of my questions for this as well. But it's going to benefit mostly our listeners. So let's start with the basics. Let's maybe talk about HomeEquity Bank so
Yeah.
people can kind of get a grasp of the company behind the product. So why don't you start with that?
Yeah. So we're a Schedule One bank, so we're federally regulated. So we've been around since 1986. So we're actually the founders of the reverse mortgage in Canada. So we have a strong banking with that. The only thing that we offer is reverse mortgages. So we really want to empower retirees to give them, the dignity to age in place, live their retirement the way that they want to.
Yeah. And I think correct me if I'm wrong on this, but this isn't just a product that you can walk up to your favorite bank in Canada and ask for this type of product, right? It's always been a niche product, and you guys have been the leaders for a long time.
Yeah, so it definitely was a niche product. It's actually the fastest growing mortgage product in Canada. And that's been given through mortgage brokers. So it's actually just because of the environment that we're in, more and more brokers, financial planners are actually looking at this product.
Okay, so let's get right into the product. What
Yeah.
exactly is a reverse mortgage?
Yeah, so a reverse mortgage is a payment optional mortgage that is equity-based lending. So the nice thing with us is that there's no minimum income and there's no minimum credit score to qualify with us. Okay.
Okay.
So it definitely provides the retirees flexibility so they can make interest payments if they like, or they don't have to make a payment at all. So it gives them that flexibility in life that they need when they're hitting that retirement stage.
Okay, so it's a mortgage essentially without payments
Correct.
that the customer is obligated to, and we'll get deeper into that later.
Yeah.
But I think oftentimes people will like to compare it to a home equity line of credit. Is that like an apples to apples comparison? Uh,
It's not because a home equity line of credit you still need to qualify for on your income and also a credit score. Okay. Um, when people are looking at this product, they really want to enhance their cash flow, and payments are required with a home equity line of credit. So it's not providing them that payment relief that they're looking for.
Right. So if we look at, okay, myself being a mortgage broker and we broker, every mortgage product under the rainbow,
Mhm.
I can tell people what the difference is, but what are the eligibility requirements for a reverse mortgage to qualify for one, as opposed to a mortgage? A mortgage, we need your income qualification, your credit check, we need 3 years job history, and so on. What are we looking at for a reverse mortgage?
55 and older and
So
have
you have to be, it's an age, it's solely
it's an
an
age.
age requirement.
Yes,
Okay.
solely an age requirement. Yeah, and they need to own their home.
Okay.
So, yep, but that's solely what it is. I mean, there's some cases that we just need to confirm that they have enough income to pay for their property obligations, which is going to be their property tax, home insurance, and strata fees. We also want to make sure that we're not putting them in a bind with their unsecured debts. We want to make sure that they can um, pay for those with their
Okay.
income.
And I recall on the applications when I first started putting together a few reverse mortgages for my clients, I recall the income component where you just said we just need to ensure that they have enough money to service their property tax, and I think that was the gist of it. And I think kind of the safeguard in this is that most of the applicants have Canada Pension Plan
Hmm.
or old age security,
Correct.
and if at all, you can maybe say there's that little income requirement. Most people check off that box pretty easily just with their Canada Pension Plan,
Correct.
right?
Yeah.
Okay.
Yeah, for sure.
And how is the loan amount determined? Like people are always asking, like, I don't want one of these on my house. It's just gonna take over my house and so on. And
Yes,
I
there's
there are limits, right? So how do you determine that amount that you lend out to
yeah, so
applicants?
we're very conservative lenders. So we're very careful on how much we lend because our goal is for the client to have funds in their home at the time that they sell their home or they
Mm,
pass away. Okay. So we go up to 59%, but where you're going to see that 59% is somebody in their mid 80s living in a major urban center. Okay. And it's basically on a declining scale from that. So at age 55, you're probably looking at about 28, 29% loan to value.
Gotcha. Okay. And I've also noticed that it's a very comforting and non-intimidating process. Like when we complete the application with someone, essentially the next step is I get in touch with you, Nicole, and you generate these illustrations. So
Yes.
there's a lot of information up front for the customer to really get comfortable with their decision.
Mhm.
And I found personally that the more time people spend with the illustrations, the more comforting they get.
Yeah.
There's no hiding what's going on here. You're obviously not making mortgage payments.
Yep.
This is a product like any product in the country, in the universe where you lend, there is interest.
Yep.
It's absolutely, there's an interest rate here. And the illustrations clearly show you the interest is just accumulated and it just adds up on the other end. And the illustrations show that.
Yeah. So I think one of the misconceptions is definitely equity erosion. So people are very scared about the equity erosion that happens. And the financial illustration basically shows that even though they're not making any payments with their mortgage and their mortgage balance is increasing, if we're using a 4% appreciation, which is very modest when we look at GVA over 5 years, how much equity is remaining in their home? And typically that their home, that what's remaining is actually growing as well.
Yeah, no, that's a good point. And again, I'd like to let people know that it's such a non-intimidating and such a relaxed process. There's no
Yep.
pressure to proceed with it. And I think the key point is it's like just slow down with the whole process
Yep.
and present the information and for people to, kind of internalize that information. So yeah, compliments to you guys for generating these illustrations, and they're not rocket science illustrations. They're basic math, and I mean you can
Yep.
put any sort of numbers in. All the ones that I've been presenting to people have been very realistic. Like you said, we've even went down to as low as 2%
Yep.
appreciation on a property just to really give people that comfort zone.
Absolutely.
Let's move along and talk more about some of the applications of this
Okay.
product. Like, why
Yeah.
are people getting this? What are you seeing most of when these deals come in?
So before there used to be this conception that the reverse mortgage was kind of like the last resort. Um, you have so much debt, you need to create financial aids before you go into a foreclosure. It's really changed where more affluent clients are using this product, either to help with a living inheritance to help their adult children get into a home. We also have affluent clients that are looking to build their real estate portfolio by tapping into the equity of their home to purchase another property since we're in a buyer's market right now and taking advantage of the buyer's market. So there's more strategic affluent clients using this rather than your last resort as a tool.
Yeah, no, it's I'm seeing that as well, especially this particular demographic in Canada. Everyone knows. People like probably don't know, but more of the properties in Canada are mortgage free than
Yeah.
than are mortgaged. And
Yeah,
I
it's
think
crazy.
that'll come as a complete surprise to people, right? But yeah, you're seeing that. Like, I mean, on my street alone, across the street or down the street, you're aware that there's a senior couple living in there. House is paid off. You're in
Yeah.
an appreciating, ever appreciating neighborhood like Vancouver, a city like
Hmm.
Vancouver. House is worth 2 million. This would be a perfect application for the
Yeah.
reverse mortgage in one of those two scenarios, either a pre-inheritance to their grandchildren, they can
Yeah.
access that equity, they can purchase a vacation property in Europe
Yeah.
wherever they want.
Yeah.
So yeah, that's a very cool application of the product. And more, I'm finding I'm having this discussion with realtors as well,
Yeah.
and it's becoming a part of their conversation toolbox. Like
Yeah.
here's some other options to consider before you explore the crazy private mortgage
Yeah. I think
option.
when I worked at the bank, we saw a lot of people that would get HELOCs to help their kids get into the market. Um, Unfortunately, saw a lot of those HELOCs, the children say they'd make the payment, they don't make the payment, the parents are on the hook for it,
Hmm.
and the parents are trying to live out their retirement. So this is kind of a safety as well, that the children can still make the interest payments, but if they're not able to, they don't have to worry about making those payments.
Yeah. And what are I think we're working on a file as well right now, and I'm seeing more of this type of application as well, where people can age in place in their
Yes,
home, and that's yeah, that's a very warm-hearted type of application,
absolutely.
especially in today's environment where people have to look at the expense of modifying their
Yep,
home, or paying for in-home care, or even considering externally putting a loved one in a senior's home.
yep.
And I think this product really opens up some possibilities and options of, you know what, you can stay in your home. And
Yeah, so I think a lot, especially since COVID, there's a recent survey that was done that actually showed that 93% of Canadians actually want to age in place. They don't want to go to that care facility. They don't want to go to that retirement residence because COVID, we also what happened. Nobody could get in and nobody could get out. They
right.
were a prisoner of those, right? So to age in place with that dignity, for something that you loved and you put a lot of time and effort into and you have your memories, people are wanting to do that more and more.
Yeah, no, and it's such a good fit. And also, I mentioned that, okay, I'm having this conversation with realtors. I'm also having this conversation with accountants.
Hmm.
I have a good, healthy stable of accountants where I generate business from and receive a lot of referrals. And lately, they haven't been too aware of this, and it's been such an open door for me to have more conversations with them. But very, very unique, and I think this is going to catch on more. The reverse mortgage, the role that it will play in retirees to supplement their
Yes.
fixed income or delay drawing from very tax inducive investments like
Yep.
RSPs.
Yep.
So we kind of keep that in mind, knowing that, you know what, remember that when money that you generate from a loan or when you extract equity from your house, it's tax free. I mean, you're paying
Correct.
interest, but it is tax free.
Yep.
And when you sit down with your accountant and you strategize some of the applications that you can use with this product, you'll
Hmm.
see that you could very likely come out on the winning end. It's incredible.
Absolutely. Yeah. So there's no implications to the pension amounts with the proceeds of the reverse mortgage because it is tax free. So
And the last note that I had here is, I think we already talked about it, but is it possible to use a reverse mortgage to help adult children with their own home purchase? Uh,
absolutely.
yeah, and
Yeah.
that's what I think you referred to as a living inheritance.
Yeah. And you're also generating family wealth, right? By getting into that marketplace, having another home that's appreciating year over year as well. So you're generating that family wealth, which is important.
So let's get more now to the mechanics and
Okay.
the repayments of this loan.
Hmm.
How is the interest calculated, and how does that all work with the reverse mortgage? You're not making payments, but where's all the interest going? How does this work?
So the interest is compounded semi-annually and it's basically added to your mortgage balance. So instead of your mortgage balance going down, your mortgage balance is going up.
Okay. And walk us through with what happens. I see the cat in the
I know.
background. This should, I'm going to replay this for our Halloween edition as
I
well.
know, black cat. Perfect.
If you're not watching this video, there's a cat that just crawled along a window ledge behind Nicole. It's awesome. And it's sitting and listening to this podcast now.
Yeah,
So
perfect audience.
okay, so we'll let the cat be captivated by this question here. Walk us through what happens when the homeowner sells or moves into care or passes away.
Yeah, so if they so they're one thing. So a nice thing about our mortgage is our mortgages are right of survivorship. Okay, so if there's one spouse or partner that passes away, the mortgage just continues on. There's no requalification like there is with a mortgage or a HELOC. Okay,
Okay,
which is really gives this demographic a peace of mind when looking at this option. Okay.
okay,
Now, if they decide to sell the property, the mortgage is just paid back like a regular conventional mortgage. We're just a charge on title. Okay.
okay,
Now, if they move into a care facility or retirement residence, um, if they do incur a penalty, that penalty is reduced by 50%.
oh,
And after the last borrower passes away, so basically nobody else is living in the house, the penalties are waived.
okay, wow. I so if we stay on the point of the penalty there, the break penalty. So
Mhm,
with lenders with conventional mortgages, it's typically 3 months interest or interest rate differential, whichever is greater.
mhm.
Is that similar to how your penalties are calculated?
No, so our penalties are basically over the first 5 years of the mortgage. Okay,
Okay,
so we're a lifetime mortgage. We don't have an amortization period of 25 years, 30 years. Okay, so the first 3 years is when the penalties are quite higher. So first year is 5%
okay,
of whatever the mortgage balance is. Second year is 4%. Third year is 3%. After 3 years, 3 months of interest. After the fifth year, however, they can give us 3 months for a notice instead of paying the 3-month penalty.
okay. And
Yeah.
that's one of the key points as well that the applicant needs to have that full disclosure up front. And one of the first questions that I ask is, do you have any ambition or intention
Hmm.
of discharging this mortgage within the first 3 years?
Yeah.
And as long as you put that out and people are aware on both sides, I
Yeah.
think it's fair game, right? So, yeah, like you just read out there, it's pretty steep in the first couple of years there, but
Yeah.
after the third year, it kind of levels out to like the penalty you would pay for a normal mortgage.
Correct.
Are there any penalties or restriction if the homeowner wants to repay the loan early? So I got this question on the current file I'm working on right now,
Hmm.
and the applicant is wondering, can I do lump sums every year or maybe on a monthly basis just to stay ahead of the interest?
Yeah, for
Is
sure.
that
So they
possible?
can, so they can make interest payments on a monthly basis. It can be the full interest payment or it can be an interest payment that fits their budget. So what I mean by that is say their interest is $1,000 per month, but their budget can only afford $200 a month, they can make that $200 a month payment. Um, they also have the option of making a 10% outstanding interest and principal payment on each anniversary date. And then the fifth anniversary date, um, 30 days after that, they can make a payment for whatever amount they like.
Okay. So yeah,
Yeah.
I think that's flexibility that a lot of people are not familiar with. I know the people that I initially talked to,
Yeah.
they think it's a lockdown, right?
Oh, yeah.
So no, this
They
thing
can
is,
never get out of it.
yeah, this thing is very flexible, and I think you guys have a product as well. You have a short-term open product or something like
We
that. Is that
do.
right?
So that product's really good for people that kind of want to take advantage of market conditions, for example, that basically want to buy in a buyer's market, but sell their home in a seller's market,
Hmm.
but need to do the chip reverse mortgage to get enough to make the purchase. They can actually pay that back at any time without a penalty.
Okay. Wow.
Yeah,
Yeah. So that there's a variety of exit strategies with this product.
absolutely.
So we've come up to this point, we've talked about some of the basic guidelines, the applications, the back end mechanics of the product. Why don't we now talk about what are some of the most common misconceptions of this product?
Yeah, so a lot of the misconceptions actually come from the States. They have reverse mortgage as well, but as we all know, bank system in the US is a lot different than the Canadian banking system.
Hmm.
So definitely one of the misconceptions is the bank is going to own my home.
Yeah,
So we're not going to own your home. We're not in the real estate in like industry whatsoever. We don't sell homes, we don't buy homes. Basically, we're just a charge on title like a conventional mortgage.
exactly. And on that note, what protections does Home Equity Bank have in place to ensure that borrowers or their families won't end up owing more than what the home is worth?
Yeah, and I think that's really important. So we have a payment guarantee that's written in our contracts that states that if your home value is ever less than what um, your mortgage balance is, you will not be held responsible for that deficient balance, neither would your estate. So, for example, if we had a mortgage balance that was 100,000, fair market value is 80,000 for the home, there's now a $20,000 deficient balance. They would not be held responsible for it. We're not going to kick them out of their home. They can live in their home as long as they want. And then when they pass away, their estate would not be held responsible for that deficient balance either. Yeah.
Why don't we end off with some statistics? Like, I mean, I've heard that this product is on the rise.
Hmm.
It makes sense that it's on the rise because I think that the baby boomers is still the largest demographic in Canada. If not, it's one of the biggest.
Yeah.
And this is a product that is on the rise. This I mean, there hasn't been any dips since I've been in the mortgage
No, it's
industry.
just becoming more and more
Every year
popular.
I'm just hearing that,
Yeah.
okay, it's rising. So what are these numbers? What kind of numbers do you have?
So what I have is there's actually more 55-year-olds than there are 19-year-olds. That's the first time in Canada that our population is actually more aging
Hmm.
than younger. So that's huge, right? So by not looking at this product and offering this product, you're actually disservicing a great portion of your clientele.
I agree.
Yeah.
And one of the things that's also you hear about it more and more, but not as often as I think we should. But this whole intergenerational wealth transfer,
Hmm.
many people uh, believe that that is something that occurs when people pass away.
Yeah.
But this is one of those applications and product applications where this is happening right now,
Yeah.
this intergenerational wealth transfer. And it is happening with that older demographic, and they're using mortgage products,
Yeah.
right? Fair enough. And that might be a good fit for them, the right application for them. But I think a major deterrent is the pension, the cash flow that they're they're utilizing or enjoying in their pension life right now
Yeah.
is simply not enough to
Yeah.
service those debt obligations. And then at the end of the day, many people are in that equity rich property
Yeah.
and unable to kind of leash that off to the younger generation. And this is just such a huge thing. And I think it's all about educating people on this product.
And I think that's like you hit it on the like you hit it on the top of the nail. I think I said that right.
Yeah, yeah.
But it's just basically educating and empowering people to make the right decision, especially with this product because there are so many misconceptions about it. Um, if we look back at the 80s, I mean, how much were houses going for in Vancouver? They had a ad in the paper once that like buy a house with us for $2,000, $5,000,
Mm-hmm.
to just try and get rid of the properties. Those houses are multi-million dollar properties now. So
Yeah.
why wouldn't you tap into that to help your kids get into the marketplace?
Yep. Yeah. And I want people to know as well that it is normal. It seems I go through this with every application, and that's why I believe the closing process for the
Yep.
closing cycle for this is a little bit longer than what you
Hmm.
would expect for a typical mortgage because I find that the applicant will take the illustration.
Yeah.
They'll take the endless emails we've been going back and forth, the notes that they've accumulated while we've been describing the product to them and all that,
Hmm.
and they'll take that. and they'll go to their children
Yeah.
to get it validated.
Yeah.
Okay. And which is, of course, you should do that.
Hmm.
Absolutely, you should do that. So they will do that. And I'm finding that the first part of that process becomes a let's find the glitch in
Yes, of
this
course.
facility. They're trying to take my parents for a ride or whatever.
Too good to be true.
Exactly. Too good to be true.
Yeah.
And then a week passes, you know,
Hmm.
they've come up with a couple of questions like, can you explain this, or how will this end up, or how can we guarantee that this is not a takeover of my parents'
Yeah.
home or something ridiculous like that. And then as you answer those questions, it
Like the
becomes
wall
a,
comes down.
yeah, the wall comes down
Yeah.
and it becomes a family solution, and they've all contributed to this,
Yeah.
and everyone ends up feeling really good about it.
Yeah.
So it's,
Absolutely.
I would absolutely, I recommend that. And I expect that in my, in the selling cycle of this product.
Yeah.
This is the part now where I give you the information and you go speak to your daughter and your son, and you guys make a decision together.
Yeah, for sure. And I think also another reason that this product has become more and more, um, popular is because your financial plan, that you did up was to basically be 40 years. That was basically how long their financial planners were looking at plans.
Right.
People are living longer. Things are more expensive. Nobody expected inflation like this at this point. So
No.
financial plans weren't able to kind of maneuver with those things. So integrating the chip into a financial plan basically allows the financial plan to go longer and to basically helps supplement their income also.
Yeah. And I know for a fact, if I'm a banker, the built-in resistance to this product
Hmm.
is simply, it's hard to compete with because it's so damn easy to qualify for.
Absolutely.
I mean, all you have to do is prove your age, for crying
Yep.
out loud.
Yep.
And that's not the case with the bank. If anything, the bank may discriminate with age.
Yeah.
You know,
Unfortunately.
yeah, they won't put that out on a statement, but that is a fact.
Yep.
So
Security.
yeah, absolutely. Um, I don't, what do you want to leave with here, Nicole? I'll give you the last word.
I think it's just important for clients to educate themselves and broker to educate their clients, empower them to make the right financial decision. Especially with this demographic, education is power, which we do know.
Awesome. Well, thank you again for joining us, Nicole. I really appreciate your time, and let's stay in touch, and maybe keep us up to date in a few months with any product updates that you guys may have.
Absolutely. Thank you.